is that I'm hoping that to share this with GDAR so that other people can benefit from this information, but I certainly appreciate you attending. If you do have any questions, if you could just put it in the chat and I'll try to kind of keep my eyes out for it. So it is just after 11 o'clock right now. I'm going to spend the first maybe 15 minutes of the presentation just reviewing 5 things your sellers need to know about mortgage financing and why you should care as a real estate professional, as a realtor. And I'm going to take about 15 minutes to do that. And then the last maybe 5 or 10 minutes, I'm just going to kind of look at a couple of different rate sheets. So just to update you on what's happening with mortgage rates. So when your clients ask, well, what's happening with mortgage rates and things like that, that you can give them an update. Mind you, I think that's part of our job, but that's what you can expect. Okay, so let's get right into the thing. So one of the most important things when you've got somebody who's buying and selling is that even if they currently have a mortgage, they may not be able to get one. And I mean, I get those calls. You might not be aware of it, but I do get those calls. And some of the main reasons why they may not qualify for a mortgage is the qualifying rules have changed. So if they got a mortgage before, like, let's just say January 2018, that was when the main mortgage rules changed. If they got a mortgage before that, they may not be able to get a mortgage now because the qualifying rules have changed. The stress test rate has changed. Now it's almost 2% higher than the current contract rate. Over the past couple of years, especially with the pandemic, there has been changes to employment, right? So people were maybe T4 they were employed by a company. They may have gone to be subcontractors for their company. They may have gone from T4 to self-employed, and most financial institutions require a 2-year history when someone is self-employed. So even if they currently have a mortgage, they may not be able to get one right now. And the main reason is, as I said, qualifying rule changes to employment. And then also their credit history may have changed. So many people that we've talked to ask for deferred mortgage payments. So that actually shows up on your credit history. And so lenders are actually saying, well, why did they have to defer their mortgage payments if there was no change in income over the past year? So that is where we're at right now. with the most important thing is, even if they currently have a mortgage, they may not get a new one because of some of these changes. Okay. The other most important thing, if you're a realtor, that you need to know for clients that are buying and selling is what happens if they don't sell on time. So a lot of times in this marketplace, what you're recommending to clients is that they purchase first and put their house on the market second. I know that because I'm hearing clients say that. If they have a firm offer on their purchase and their sale and the closing dates don't match up, that's usually easy peasy. We can arrange a bridge loan. And remember, a bridge loan is the loan for the down payment on the house. Okay? The bridge loan is a loan for the down payment on the house. Because usually what happens with a bridge loan is, let's just say they're purchasing first and they may be selling in a month or 2 weeks or 7 days, and they're expecting the money from the sale of the house to put as a down payment on their purchase. Okay, so no problem if they're buying and selling and the closing dates don't match up. However, let's just say their purchase date is coming up and they don't have a firm offer on their sale yet. Some of the things that they need to consider then is, well, where's the down payment coming from? Can someone gift them the money temporarily until they sell their house? And can they qualify for two mortgages at the same time, right? Can they get approved for two mortgages at the same time? That's another kind of question. Sometimes they can if their income is strong, and let's just say they have a very small mortgage on their current home and they're going to be, not needing a very large mortgage on the new home that they're buying. We can usually kind of work that out if they're getting some money as a gift from a family member for down payment, which at some time they'll pay them back later. However, I just actually dealt with somebody who closed at the end of August where she was moving to Guelph. The real estate agent obviously purchased the house, but she was selling a house in a small rural town and she hadn't sold it yet. So she was approaching a week before the closing date on her purchase. She called me and she said, listen, I haven't sold my house and now my bank won't do the mortgage because I don't qualify for owning both houses. So what we did was we arranged a private bridge loan. I mean, that cost her probably about 20 grand, but she was able to close on time for her purchase. And subsequently, she's now got an offer on the sale of her house. And so we can kind of tidy that up and pay out the private bridge loan. So the other thing too, and again, what we're talking about today is what happens, like why you should care as a real estate agent when you have a client that's buying and selling. Because sometimes the assumption is if they're purchasing another property and they already have a mortgage, they shouldn't have problems with financing. I tell you that there are problems and we often deal with them. One of the things that keeps coming up that I see a lot is that problems are coming up more often with the physical house that they are buying. Problems with the physical house that they're buying. Okay, so more homes need a lot of work as a percentage of the market. So I don't know about you, but everybody's trying to unload their crappy properties, right? Don't take that the wrong way. And so there are more homes that need a lot of work as a percentage of the market. So I have some clients that are buying and selling, and I mean, they're selling for $500,000. They can't qualify for a house over $1 million. So they're looking for a fixer upper in about $700,000 to $800,000. So they may have trouble getting financing because the houses that they are looking are in bad shape. So even though your buyer or the client that's buying and selling has been pre-approved for the mortgage, if there is a problem or if the property is really beaten up, they still may have problems getting financing. One of the things that the lenders are looking for, I don't know how many of you have done business with me, but we always ask for the listing with the seller's name on it. And the reason why we're asking for a listing with the seller's name on it, so we can match what's on the purchase agreement. And if the realtor listing has handyman special on it, lenders are on the lookout for this. And again, people who are buying the house may have trouble getting financing. So we need to sort of mitigate that and disclose all of the issues of the property. And normally we can work some of these things out. Sometimes there's a holdback that the lender will require. So for example, I just did a mortgage for a lady who was buying a cottage, and the roof completely need to be redone on the house. And you could see it when you looked at the aerial map. So what the lender did is they still approved the mortgage, but they held back $5,000. The lawyer will hold back $5,000 for her to do the roof, and it had to be done within 30 days from purchase. So that's kind of how we deal with those handyman specials. The other thing I've been noticing as it relates to problems with the physical house that they're buying is that a lot of people are moving into rural areas and purchasing properties that may have a very unique zoning issue. So for example, I'm thinking of some of those rural towns where you're driving through the town and there's like a corner store or, you know, like a commercial spot, and then there's a few residential houses. Um, some of those houses have been zoned as commercial, but in fact, they're not commercial. They're being used as residential. So again, these are some of the problems that can come up with the physical house that your buyers and sellers are purchasing. So we need to make sure that, thankfully, we have a good lender that will lend on homes that are like it's being used as a primary residence, like a residential use, but it is commercially zoned. So if you ever come across that, we are happy to help those people. And then the other problem that can come up with a physical property is the appraised value versus the purchase price. So one of the things I always get a question on is, when does an appraisal happen? Well, if your buyers are purchasing a house and they have a financing condition, we usually like to do an appraisal as a part of the financing condition, but we know for a fact that that's not always the case. So we, at our office, we normally like to do the appraisal at the beginning part of the process. So if there's a difference between the purchase price and the appraised value, and sometimes there is, we can sort of figure out a solution on that. But I can tell you, we do hundreds of mortgages a year at my office, and we find that it's less than 5% of the time people have trouble with appraisal. So we don't find it's actually coming up as often as we think. One of the really neat things about working with my office is we have access to something called Purview. And what we will do is, if your buyer needs to put an offer without a financing condition, we do a Purview report, which gives us an idea of what the house might be appraised at. It's an auto valuation tool, and we will send it to you as a real estate agent, so that we know if there's going to be a problem with the appraisal, that we've already discussed that with the people that are buying and selling. So those are some of the cool things. Sorry I'm spending so much time on this, but this is a really important point. The other thing, again, what we're talking about today is why you should care as a real estate agent on some of the issues that come up with financing when you have someone who's buying and selling. I have not seen many homes where the purchase price is over $1 million in the last 20 years since I've been doing business, as I have probably in the last 6 months. Like at my office, we may have done purchases over $1 million, maybe 5 or 6. Of course, now with prices going up, $1 million purchase price is quite typical. So I wanted to kind of highlight this a little bit, is that if you have people that are buying and selling and they're buying over $1 million, over $1 million right now as a purchase price is still considered a very unique category in Canada. And the main reason for that is that in Canada, when you buy over $1 million, those mortgages are not, we cannot insure them against default. It's just a regulatory requirement. Now, the Liberal government was voted in. They did, one of their election promises is they were going to increase that maximum to 1.25 million. So that is one of the problems with purchasing properties over $1 million, is that these buyers have to have more than 20% down. And it's typically not just 20% down. There's something called a sliding scale, where they will probably have to have more than 20% down, because these mortgages you cannot insure. And because these mortgages cannot be insured, or what we call insurable or back-end insured, the rates are typically the highest. And as I said, I'm going to spend the last 10 or 15 minutes of this presentation going through rates. So you'll see what I mean about rates are typically sort of mortgage rates. The other thing for purchasing properties over $1 million, a lot of them are in rural areas or estate type properties, or properties that might have acreage. So there is sometimes trouble getting financing on well and septic versus municipal services. So kind of keep that in mind. And I can tell you, we are versed in all of this. So if you're looking for somebody, if you're a realtor that typically does more rural properties, you want to talk to us. Make sure you get us the copy of the listing with the seller's name before your buyer puts an offer on the property, and we can make sure that there's not going to be any issues with financing because we're very good at that. And then the last thing I wanted just to review with you today is turnaround times. So again, we're talking about why realtors should care about what their sellers are doing because they're going to get financing, and we know that's not the case, right? So turnaround times, they're slower. What we're finding, because we do mortgages with TD and Scotia, and I'm actually going to show you the TD rate sheet for today. Chartered banks, RBC, are typically slower. Sometimes financing turnaround times, obviously you would never have a condition like this unless you live in Newfoundland, but can be 2 weeks. To speed up the process, from a realtor point of view, get your clients to talk to us, even if your buyer and seller is thinking of selling. We have helped clients who've been thinking about selling for a year and a half, for 2 years. There's no problem with us chatting to that particular buyer. We are happy to do that. And we can prepare them so that when they find that perfect house, you can go in with a firm offer, or they're not going to have problems with financing. And the other thing that we've done to sort of speed up turnaround times is we do everything virtually. We have not physically met a client in our office since February 2020. And clients love it. We're able to collect information in a secure way online. Clients upload all of their documents into a secure portal, and we can actually turn things around very quickly. So I actually had a client contacted me last Thursday, and they were like, we want to put an offer on actually it was on Wednesday, we want to put an offer on a house on Friday without any conditions. And I said, okay, well, let's get your mortgage application. They've got us all of their income documents. We met on Thursday, and they were able to put an offer on a house on Friday. And we're just in the process of finalizing the details on the mortgage because their offer was accepted. So no I said turnaround times are slower, not at our office. We can still turn things around very quickly, but you have to prepare your buyer, seller, client to make sure that they've got all of their documents, because usually it's a holdup with the clients because they don't have their letters of employment. They don't have their pay stubs and all that other good stuff. Okay. So I don't know if you guys have any questions, but if you do, you can just put them in the chat and I'm happy to answer them. I wanted just to do a quick look at what's happening with mortgage rates and talk a little bit about some of the proposed changes that are possibly coming that were a part of the election platform. Okay, so let me just do a quick screen share. And this is how we would typically meet with a customer. So I love always sharing this rate sheet. So again, I'm just wrapping things up. This is going to be sort of the last 5 minutes of the presentation. So we do mortgages with First National Financial, and they're like the wholesale division of RBC. The reason why I bring their rate sheet up is they do an excellent job, and let's make sure that I'm screen sharing here. I'm just going to make sure I think we're doing a screen share here. It says I'm sharing my screen, so it looks like that you guys can see this. So what I'm finding here is, again, mortgage interest rate. So these are high ratio mortgages. So remember, in Canada, when you have less than 20% down, the mortgage is insured against default. And you can see here, and try explaining this to somebody who's putting 30 or 50% as a down payment, or maybe buying a house on over $1 million and has like $500,000 as a down payment. Rates for insured mortgages where the borrower is putting less than 20% down are, you can see here, 1.89% on a 5-year fixed, and these are variable. prime 2.45 minus 1.1%. Excellent rates. In this category here, you can see this is for self-employed people. We have a great program for stated income individuals who are self-employed. Conventional means that these clients have more than 20% down, so you can see between 20 and 35% down, and they are purchases that are looking for 25-year amortizations. So again, you can see depending on the loan to value, right, depending on how much they're putting as a down payment, and then what the typical 5-year fixed rates would be. Remember, P is prime minus 1%. And then here, in this last category, these are uninsurable mortgages. So these are for people who are refinancing, buying properties over $1 million, because remember, if you have a purchase of over $1 million, you cannot get the mortgage insured, or it doesn't fall in that insurable category. Okay, and so you can see here, owner occupied up to 80% down with a 30-year amortization or a $1 million purchase. Rate's still very good, not as good as 1.89%. Okay, so that's First National Financial. If I just hit, that wraps things up for today. I did want to just ask you that if you liked hearing, you can always connect with me through my website at skipthebank.ca. I've got a great link on there where you can schedule a 15-minute consultation. You can always call or email me. We are certainly busy, but I always answer the phone when I'm available. The last thing I just wanted to mention to you is I wanted to give a little bit of a commentary on some of the proposed changes that are coming down the pipeline, we think, with mortgages. And we are encouraged because I think what we're going to start seeing, hopefully, is some easing back and making it easier for people to qualify for a mortgage. And I'm really advocating for this. And the two things that I hope will be coming down the pipeline are, right now, if somebody is putting less than 20% down, the maximum amortization that they can have is 25 years. And we're advocating that they reconsider that to a 30-year amortization. When I started in this business, if you had less than 20% down, you can get a 40-year amortization. So what that will do is that will increase people's borrowing ability. I also am hoping to, and this is what we're advocating for in our office, just to make it more affordable or easier for people to get into home ownership, is right now the stress test rate is at 5.25%. Whereas you could see some of the discounted rates on mortgages are at about 2%. So imagine having to qualify for a mortgage at 2.25% higher than you're actually getting on the mortgage contract rate. So one of the things that we are advocating for is possibly looking at lowering the qualifying rate. Now that hasn't happened. Those things have been in the grumblings, but that should help people get it into housing. And whether or not you're dealing with a first-time home buyer or somebody buying and selling, they still do have issues qualifying. And I can tell you, you may not hear about them because your buyers and sellers could be embarrassed. So why not have them talk to us first? Because they may have gone to their bank and they've been declined, and then it's going to hurt things on your end for you to be able to help them buy a house. So that's it for me. Again, I just wanted to wrap up and just show you one other really cool thing. So if you go to my website at skipthebank.ca, clients, you can always book a one-on-one consultation with me just by clicking on this button, and it opens up my schedule, and you can just pick a time. You can see that I'm fairly available this afternoon, which is good. We also do have a really great mortgage app on there. So if you go to my website and you click on this, the app is actually excellent. And I'm not just telling you that because it's our app. You can have your clients do a pre-qualification certificate. You can do it for your clients. The other really cool thing about the mortgage app is it lists our interest rates in real time. So if you're always curious, or if somebody asks you, okay, well, what's happening with mortgage rates, it lists all of the financial institutions that we work with and what their current rates are. So thank you so much. You guys have a great day, and we're so glad that you joined us today. Okay, take care. Go sell a house. Okay, bye for now.